Hello students! Today's live lesson will cover selected topics from Lesson 6. I hope to emphasize information that will assist you in comprehending the learning objectives and provide real-world applications. The learning objectives of each lesson are a useful tool to ensure comprehension of key concepts. First, let's briefly review the learning objectives of Lesson 6. After completing this lesson, you should be able to identify the roles of accountants in business, define the different types of accounting, identify the types and components of various financial statements, explain the use of various financial ratios, and explain specific issues related to international accounting. This live lesson will cover the roles of accountants in business, the different types of accounting, and specific issues related to international accounting. First, let's begin by defining accounting. Accounting is a comprehensive system for collecting, analyzing, and communicating financial information to a firm's owners and employees, to the public, and to various regulatory agencies. To perform these functions, accountants keep records of taxes paid, income received, and expenses incurred, a process called bookkeeping, and they assess the effects of these transactions on business activities. There are numerous parties that utilize accounting information. Business managers use it to develop goals and plans, set budgets, and evaluate future projects. Employees and unions use it to plan for and receive compensation and such benefits as health care, vacation time, and retirement pay. Investors and creditors use it to estimate returns to stockholders, determine growth prospects, and decide whether a firm is a good credit risk. Tax authorities use it to plan for tax inflows, determine the tax liabilities of individuals and businesses, and ensure that correct amounts are paid on time. Government regulatory agencies rely on it to fulfill their duties towards the public. The Securities and Exchange Commission, for example, requires firms to file financial disclosures so that potential investors have valid information on their financial status. There are several different types of accounting. At this time, we will compare financial and managerial accounting, which starts on page 358 in the textbook. Financial accounting is concerned with external information users, consumer groups, unions, stockholders, suppliers, creditors, and government agencies. It focuses on the activities of the company as a whole rather than the individual departments or divisions. Managerial accounting serves internal users, such as managers at every level, engineers, purchasing agents, and salespeople. This type of accounting helps these employees make strategic decisions and improve business operations. While there are numerous types of accountants, we will discuss certified public accountants, private accountants, management accountants, and forensic accountants. You can also learn about other types of accountants in the textbook on pages 359 to 363. Public accountants often provide accounting services for the public and are independent of the clients they serve. Public accountants usually work for an accounting firm, which means they have no vested interest in the outside clients' firms. This prevents bias. Certified public accountants are licensed by a state after passing an exam prepared by the American Institute of Certified Public Accountants. Certification also requires 2 years of practice in an accounting firm and extensive experience in auditing. Certified public accountant firms typically provide auditing, tax, and management services. An audit examines a company's accounting information system to determine whether financial reports reliably represent its operations. The auditing of a firm's financial statements is one of the services that can be performed only by a CPA. Tax services include assistance not only on tax return preparation, but also with tax planning. Accounting firms also provide management advisory services ranging from personal financial planning to planning corporate mergers. On the other hand, a private accountant is a salaried employee of the company hired to perform day-to-day activities. Their responsibilities can include budgeting, financial planning, internal auditing, payroll, and taxation. Private accountants may be certified or not certified. A management accountant supports management in various activities such as marketing, production, and engineering. Many management accountants are certified management accountants, which is a special designation of passing experience and examination requirements. Finally, the last type of accountant we will discuss is a forensic accountant. Forensic accountants use accounting for legal purposes, such as investigating business and financial issues that may have an application in the court of law. Law enforcement agencies, insurance companies, law firms, and business firms may ask for these services to receive investigative, accounting, and litigation support in crimes against companies, crimes by companies, and civil disagreements. This is the fastest growing area in the field of accounting. This video link will describe accounting as a career. While the video is fairly long, it can be really insightful as to what an accounting job is like in real life. At this point, I think it's important to briefly touch on the Sarbanes-Oxley Act of 2002. This legislation restricts the types of non-auditing services that a certified public accountant can provide, which encourages unbiased auditing practices. As you can see on page 363, there are many provisions of this act, which provide a safe system to report illegal activities. Now, let's discuss how accounting can be internationalized. The International Accounting Standards Board, IASB, is an independent, nonprofit organization responsible for developing a set of global accounting standards and for gaining the support and cooperation of the world's various accounting organizations to implement those standards. Many countries still prepare different financial reports using local accounting practices for each country in which they conduct business. This can result in a vastly different picture of a firm's financial health, leading to misunderstanding among investors and other constituents. The U.S. Securities and Exchange Commission is working with the IASB to improve this situation. And while the textbook states that this is a working collaboration, the following video explains why IASB standards have not been fully integrated in the United States. I have created a small Check Your Understanding section similar to the online presentations to help you verify your comprehension. You can review the answers on the next slide. Thank you for watching today's video. Please reach out to me via the chat room or email if you have questions. Thank you and have a wonderful day.